Hello and welcome to the Ontario Mortgage and Real Estate Insights podcast. I'm your host, Steve Hamon. Today we're diving into some exciting news from the world of mortgage brokering in Ontario. We're going to talk about a development that's being called a game changer for the broker community in the province. Tango Financial, a multi-billion-dollar brokerage well established in Western Canada, is expanding its operations into Ontario. This move is poised to create significant opportunities for brokers looking to grow their businesses under a highly respected brand. Tango Financial, known for its robust network of more than 70 teams and over 400 agents nationwide, is launching Tango Ontario. This expansion is led by Tom Moffat and Brandon Love, who bring a wealth of experience and enthusiasm to the table. They believe that this move will provide immense opportunities for brokers in Ontario, a region they feel is currently underserved by existing brokerages. Tom Moffat expressed his excitement about joining Tango, highlighting the company's stellar reputation in the industry. He mentioned the strong relationships Tango has with lenders, the attractive perks, and the volume bonuses that are all set up to ensure success in Ontario. Meanwhile, Brandon Love pointed out that many brokers in the region are often paying for services that do not deliver. He sees Tango as a solution to this problem, emphasizing that the return on investment with Tango is massive. The monthly fees cover everything from tech stack to insurance and credit pulls, making it a clear value win for brokers. What's particularly interesting about Tango's model is its plug-and-play platform, which is designed to support the growth of brokers and teams alike. Moffat noted that many existing brokerages are not built with team growth in mind. Tango's full-service model handles much of the heavy lifting, allowing brokers to focus on scaling their businesses. For brokers who are already established and have a good grasp of the mortgage space, Tango Ontario offers an opportunity to expand their book of business and improve marketing and sales efforts. This approach has proven successful in Western Canada, where Tango's culture and tech-driven strategy has fueled growth into a multi-billion-dollar brokerage. Moreover, Tango Ontario is about more than just business growth. It's about building a community. Moffat highlighted that many brokers feel disconnected from their current brokerage. Tango aims to change that by fostering a sense of community through regular events and other engagement opportunities, which they believe sets them apart from other brokerages. With the leadership of industry veterans like CEO Dean Larson and COO Jason Henneberry, Tango Ontario is bringing a proven framework of success to the province. Brandon Love is confident that this expansion will offer the same level of excellence and opportunity that brokers have experienced in Western Canada. As Canada's mortgage market prepares for an expected increase in activity in 2025, many brokers are reconsidering their current brokerage arrangements. Moffat encourages brokers to explore their options just as they would compare mortgage rates. Tango has streamlined its onboarding process to make transitions seamless, though finding the right fit remains crucial. Brandon Love adds that while Tango may not be the right fit for everyone, it offers serious benefits for those looking to save on operating costs while growing their business. He invites brokers to engage in a conversation to explore how Tango can help them achieve their goals, offering direct communication and side-by-side comparisons as part of their decision-making process. Today, we're taking a closer look at the current mortgage rates in Ontario, which have been a hot topic as of late. With the Bank of Canada recently lowering its overnight rate to 3.75%, we've seen some shifts in the landscape for both fixed and variable rate mortgages. Let's break it down. As of October 24, 2024, fixed mortgage rates in Ontario have settled below 4.3% in some cases, while variable rates have dipped below 6%. This is quite a change from earlier in the year when we saw fixed rates hovering around 5%. The Bank of Canada's decision to cut its overnight rate by 50 basis points is significant. It's made variable rate mortgages more attainable, which may encourage more buyers to consider this option, despite the challenges that still exist in the housing market, such as limited supply and elevated prices. For those looking to purchase a home, the type of mortgage you choose can have a big impact on your financial future. Fixed-rate mortgages offer stability, with rates remaining constant throughout the term. On the other hand, variable-rate mortgages can fluctuate with the market, potentially offering lower rates, but with added risk. Now, Many Ontarians are wondering if mortgage rates will continue to fall. The Bank of Canada's recent actions suggest that variable rates might decrease further, with another rate announcement scheduled for December. Fixed rates, however, are influenced by the bond market, which can be unpredictable. Despite these fluctuations, the Ontario housing market showed some improvement last month. According to the Ontario Real Estate Association, home sales increased nearly 10% year over year in September. However, prices remain high, with the average sale price in the province at $851,478. For first-time homebuyers in Ontario, it's important to be aware of the available programs that could help reduce upfront costs. The provincial government offers a land transfer tax refund of up to $4,000 for first-time buyers. In Toronto, this refund can be as high as $4,475 due to additional municipal taxes. As we move towards the end of 2024, real estate experts and home buyers alike will be watching closely to see how these rate changes impact the market. With the potential for further rate cuts, it's a dynamic time for anyone considering entering the housing market in Ontario. Recent mortgage reforms introduced by the federal government, while a step in the right direction, are not enough to fully address Canada's growing housing affordability crisis. This is according to Lauren Vandenberg, Chief Executive Officer of Mortgage Professionals Canada. She made these comments while testifying before the Standing Committee on Finance, where she commended the government's recent actions, including extending amortization periods for first-time homebuyers and raising the insured mortgage ceiling to $1.5 million. Lauren Vandenberg expressed her appreciation for these changes, but emphasized that there are still critical areas needing further attention. When asked whether she believed the dream of homeownership was dead for many middle-class Canadians, as mortgage expert Ron Butler suggested in his testimony earlier in the week, Vandenberg acknowledged the serious challenges but struck a more hopeful tone. She stated, "Housing affordability remains the most critical financial challenge facing Canadian households today." Vandenberg noted that housing costs continue to outpace incomes, particularly in major urban centers like Toronto and Vancouver, where many families spend as much as 84% and 106% of their income on housing, respectively. It's very much a national crisis and requires a coordinated effort across all levels of government, she added. Despite the positive steps forward, Vandenberg stressed the need for more measures to ensure access to homeownership and to keep the dream alive. It's not just an economic issue, but also a matter of national well-being, which affects the social fabric of our communities, she emphasized. Vandenberg highlighted two key areas requiring immediate attention: extending 30-year amortization to all home buyers, not just first-time buyers, and establishing a national housing roundtable. This roundtable will bring together all levels of government, industry leaders, and civil society to engage in ongoing dialogue and develop long-term solutions to the housing affordability crisis, she explained. While provincial and municipal governments have made commendable efforts to address housing barriers, Vandenberg called for a coordinated federal effort. She believes that a permanent forum for collaboration would ensure that Canada's housing challenges are addressed holistically and would demonstrate the government's continued commitment to solving this crisis. Additionally, the association is urging the government to combine the Home Buyers Plan with the First-Time Home Savings Account to simplify the process for first-time buyers and help them better manage their savings for down payments. Another significant recommendation from Vandenberg's testimony was the call for a digital income verification tool. She explained that this tool would significantly streamline the mortgage application process and help reduce fraud. Currently, mortgage applicants must provide income verification through outdated manual methods, which are both time-consuming and susceptible to fraud, she noted. Vandenberg advocated for a secure digital tool through the Canada Revenue Agency that would allow trusted third parties in the mortgage industry to instantly verify income, thereby reducing fraud and improving efficiency for lenders and homebuyers alike. Mortgage fraud is on the rise, and it has been for a while, she said. A digital income verification tool is critical to combat that while maintaining data privacy. Equifax Canada reports that mortgage fraud is occurring 30% more frequently compared to pre-pandemic levels, while the Canadian Anti-Fraud Centre reports that $569 million was lost through fraud in 2023. In his own testimony before the committee, mortgage expert Ron Butler of Butler Mortgage expressed disappointment over the slow progress in implementing digital income verification. The Canada Revenue Agency had initially committed to exploring a digital income verification tool as part of measures in the federal budget in the spring, but there has been little movement on the issue since the announcement. Butler highlighted the ongoing delays, remarking, "Yet nothing and nothing until possibly next year," expressing frustration over the lack of timely action on a solution that could reduce mortgage fraud and streamline the home buying process. He concluded by expressing his hope that the problem of mortgage fraud through false income documents in Canada could finally be ended. Because even though it's not rampant, even 1,000 is too much. And believe me, there's more than 1,000 cases of mortgage fraud, he said. The Ford government recently voted down a private member's bill that sought to expedite the conversion of vacant office spaces into residential housing. This decision has sparked considerable debate online. Back in May, Liberal member of Provincial Parliament Karen McCrimmon introduced Bill 201, the Commercial to Residential Conversion Act of 2024. The bill aimed to save approximately 2 years in the process of converting offices into apartments, addressing both the critical need for residential housing and the high commercial vacancy rates. McCrimmon argued that the bill would remove significant barriers that prevent the transformation of commercial buildings to residential use. She collaborated with city planners to develop the bill, identifying specific regulations as common obstacles in building conversions. Despite this, the Ford government rejected the bill, citing potential unintended consequences on existing regulations. A spokesperson for the government stated that their focus is on removing unnecessary burdens to facilitate new home construction. They mentioned ongoing efforts to reduce record of site condition requirements for certain redevelopment projects, including the conversion of larger commercial office buildings to residential or mixed-use developments. McCrimmon expressed disappointment over the lack of support from the Ford government, noting that no specific reasons for opposing the bill were provided. She emphasized the simplicity and potential impact of the bill, which had garnered support from the Ontario Real Estate Association and the Ontario Society of Professional Engineers. The national office vacancy rate, according to CBRE's Canada office figures for the third quarter of 2024, rose slightly to 18.6%. In Toronto, the vacancy rate increased throughout 2023, reaching 18.2% in the third quarter of 2024. This situation highlights the ongoing challenge of balancing the demand for residential housing with the need to maintain adequate office space. Currently, the city is conducting a study to analyze office market conditions and assess the feasibility of converting office spaces to alternative uses. The Planning and Housing Committee has endorsed proposed office conversion policy directions and asked city planning to conduct further research and engagement on office replacement, with a report on final policy recommendations expected soon. The city's website notes that the loss of office space is typically permanent and cannot be reversed if market conditions change. Given Toronto's significant role as a hub for office employment and corporate headquarters, any policy decisions must be informed by comprehensive analysis. The Office Space Needs Study will include a market analysis to weigh the benefits and risks of office space conversion. It will explore policy options that balance short-term and long-term office needs, ensuring any changes are beneficial for the city's economic landscape. Today, we're diving into the real estate landscape in southern Ontario, where the speed of home sales is making headlines. Whitby and Clarington have emerged as the fastest-selling areas in the region, with affordability playing a key role in this trend. Compared to the soaring prices in Toronto and the Peel and Halton regions, Durham region offers more accessible options for homebuyers, leading to quicker sales. According to Zoocasa, a prominent real estate company, the demand for properties in Durham is robust. In Whitby, townhouses are among the quickest to sell, averaging just 12 days on the market. Clarington is not far behind, with condos selling in about 22 days. Meanwhile, Oshawa's freehold properties are also drawing significant attention, with semi-detached homes selling in an average of 18 days and detached houses in 21 days. The dynamics of the market reveal that condo apartments, while more abundant tend to stay on the market longer, averaging 38 days. However, Uxbridge is an exception, where condos are selling remarkably fast, averaging just 12 days, though this is based on a smaller number of sales. More stable figures come from Clarington and Ajax, where condos sell within 22 to 23 days. Brampton sees a slightly slower pace with condos averaging 32 days. The Greater Toronto Area as a whole shows varied selling times. Semi-detached homes typically take about 20 days, townhouses average 22 days, detached homes about 25 days, and condos linger the longest at 35 days on average. Yet, Durham region stands out for its affordability, particularly for townhouses, which have an average price of $804,536 and sell in about 18 days on average. In Whitby, the demand for semi-detached homes is particularly strong due to their balance of privacy and affordability, with an average market time of just 15 days. Pickering and New Tecumseh are even faster, with homes selling in 12 and 9 days, respectively. The push for more affordable housing options is evident in the brisk sales of detached homes in the Toronto region. Lower-priced homes are moving quickly, contrasting with the slower sales of luxury homes. For instance, in Oakville, where the average detached home exceeds $2.1 million, it takes about 30 days to sell. In Toronto East, homes priced at approximately $1,025 million sell in just 17 days. In comparison, Pickering and Whitby average 20 days, while Clarington and Oshawa, with an average selling price of $854,945, see homes sold in 21 days. Richmond Hill, with its higher average home price of $1.9 million, experiences slower sales, averaging 28 days on the market. Meanwhile, luxury homes in King, priced around $2 million, take about 40 days to sell. These figures underscore the significant impact of affordability on the speed of home sales in various regions. As we conclude today's episode, it's clear that the real estate market in Southern Ontario is as dynamic as ever. From the rapid sales in Whitby and Clarington to the slower pace in luxury markets, the landscape offers a variety of opportunities and challenges. Thank you for joining me on the Ontario Mortgage and Real Estate Insights podcast. Until next time, stay informed and make well-informed decisions in your real estate endeavors.